everybody, it's Cindy Bishop with Cindy Bishop Worldwide, and today we have Jolene Moore with our monthly market update, which, as you all know that have been here before, you're back for a reason. Jolene's really good. So Jolene Moore is a Senior Vice President for Main Street Home Loans, and one of my favorites, not only as one of our lending experts that teach for Cindy Bishop Worldwide, but also as an unbelievable business building and development trainer. And by the way, we're getting filled up. I don't know how much space we have left, but next Wednesday, the 10th of March at 1 p.m., if you go to cindybishopworldwide.com and then you go to upcoming events and then you select the menu option of webinars, you will find that class there and you can sign up for that. Just $10 and you will learn how to convert. And that's the big problem in sales. People don't convert successfully. So, or at least the numbers they should be converting. Jolene is a master at that and she will teach that to you. So with no further ado, Jolene, take it away.
Hello, everyone. Happy Tuesday. So hi, Maddie, and I do appreciate you being on video and a shock you too. So like Cindy said, it is really hard doing these classes when you aren't looking at anybody and don't get any feedback or anything like that. So I always love when you guys ask questions, when there's any kind of interaction. And, you know, like Cindy said, it can be, I haven't had too many challenges with it. So if you want to unmute yourself and talk, feel free. Or put it in the chat box if you have any questions. So, you know, we started this, gosh, it's almost been a year now. It's crazy. Last March. And so we do this every month. So I try to just update you guys on what I'm seeing in the mortgage industry and some other things kind of relative to the market in general to just give you an idea. So I kind of go through the loans that we've done and said, okay, what challenges or issues or things that I think could be relevant and helpful to you, and bring those up in here, and then just other things, general numbers relative to the market. So if you guys have any questions, like I said, pop in, you know, ask the question, unmute yourself, or put it in the chat. All right, so interest rates. It's always one of the most, you know, important topics that are asked the most frequently. And as I'm sure you've heard, and I think most of you have been on one of my classes or on these updates before, so I think you should be on my emails that I'm sending out every week. So I did do an update last week that talked about the rates have moved up. So, you know, rates, they kind of surprised me. I was just talking to the president of my company and he was like, didn't surprise me, but they did move up on a quicker fashion than I anticipated. So they, you know, they're still incredibly low. So still in the low threes, but we probably did move up to 0.375 to 0.5% higher than we probably were about 3 weeks ago. So, you know, when I sent out the video earlier, I think it was last week, you know, the things I mentioned is one, just trying to make sure you're educated so you know what's happening with the market so you can have these conversations with your clients. But also two, if you have any clients that were kind of really pushing the limit of what they were qualifying for, that they want to have a conversation with their lender before they make that offer to make sure that nothing has changed. And even if they weren't pushing the limit, you know, for depending on the loan amount, you know, every eighth in interest rate, you know, it's probably a variance of $20 to $40 a month, depending again on the loan amount. So it's not a significant difference, but it can make a difference. So it's definitely something you want to have they want to have the conversation about so they know where the market is right now. I also did a video to all of the clients that I've pre-approved over the weekend, you know, saying if you're making any offers or thinking about it, you know, the market has shifted a little bit, reach out to me so that we can have the conversation and make sure that, you know, everything still looks good for you. So, you know, I had some people reach out, we had conversations, and for the most part, it didn't really have a negative impact, you know, and they still, you know, definitely wanted to look at moving forward. But again, something you want to keep in mind. The reasons why we're seeing rates move up, or is what, you know, kind of what they're thinking is what's spooking the bond market, is fear of inflation. Some of that is due to the stimulus package. As we probably all know, that stimulus package of 1.91 was it billion or trillion, probably trillion dollars, is a lot of spending. So where is that money coming from? It's creating debt for the, for the government, which means they have to make that up in other ways, and they're going to have to raise some costs to do so. Also, I think Costco announced, I think it was last week or the week before, they're raising their minimum wage, I think from $15 to $16. That's inflationary. So anything when pricing goes up, or what we have to pay our wage earners, that's going to cause inflation. So those types of things are having an impact on the market. Now, I don't know, for the future, what that means. I think I read some articles today when I was kind of updating this, that some people think that the feds might be doing some tweaks to, because right now the feds are buying mortgage-backed securities, which is what's trying to help control interest rates, in the sense that they're not wanting the market to be too volatile and for it to go crazy. So they are talking about some policy changes on their end that might help, because we've seen a lot of volatility. Like each day it can be like all over the map. It was so crazy last week. I was like, oh my gosh, I can't, if I quote one rate today, it might be a different rate the next day, which can be very challenging for us, but also for the client. So they're looking at doing some things that hopefully might ease some of this volatility that we've been seeing. So I'll keep you posted on that as well. And I'll for sure send out videos if I learn any more information on that. I've been mentioning forbearance, in this since it started, last year. And I just like to always just kind of update you, because I have that conversation with clients on a pretty regular basis. Like I had one earlier today where they've been in forbearance for a year. They are now getting ready to come out of forbearance. They're going to have a balance, and I'm going to talk about this in just the next slide, but there's quite a few Americans that are in forbearance right now. That has an impact on them. And this is something for you guys to think about from the real estate side, is making sure you're staying in front of your sphere, that they know that if something is happening for them and they're, having struggles, to make their payment, because this forbearance right now has been extended till June. If that forbearance ends in June, most, I think, investors are going to tack that money that they've, the payments that they've skipped to the end of the mortgage. So it's not going to be something they're going to come up out of a large, amount due at that time. But that means, one, they've owed more in the house now. Two, they now have to start making the monthly payment. So can they make that payment at that point in time? Is there concerns for them? Do they want to look at potentially selling before they have any concerns of going into foreclosure? Because, as we know, the market is insane right now. Our values are increasing, and we would hate for anyone to miss out on being able to sell their home and take advantage of any equity they might have in the home, rather than letting the home go into foreclosure. So it's really about educating your clients, so that they know they have options and what they need to do, and prepare themselves before they get too far in to where it might be too late, when they come to you. So think about that, as these forbearances, are going to be having impacts on the market, as we go along. And speaking of that, so in some of the statistics are, 2.1 million people are behind at least 3 months on mortgages, and 8.8 million behind on rent. I know that there is obviously the forbearance we just talked about, which is helping those that are potentially in the mortgage situation. But those are loans that are going to be Fannie and Freddie and government loans like FHA and VA. If their loan product doesn't fall in that category, they may not be eligible for forbearance. So that's something to keep in mind. The other thing is for rent, there's supposed to be a moratorium on basically being able to, evict someone. Again, those are when their home, the homes are secured by any of those types of organizations, then they have, are preventing them from being able to evict anyone. If they don't, if they don't have a mortgage on the property or something like that, they still may be able to. So again, just, staying in touch with clients that you've looked at renting, before, and just making sure that we're doing everything we can to help everybody and be able to find them homes and housings that they can afford, if they've been impacted, if their income's been impacted due to COVID. As we all know, inventory is so low. So we nationally, statistic is that inventory from last year to this year is down 55% from the same week. I did read, and I'm sure we all have seen this in the past, that March, like early March, tends to be the low point of the inventory, and that as we move along, into March, that we're going to hopefully see some more homes coming on the market. I just had a conversation with a client, just a few minutes ago, and was asking me that same question, like, what do you see? So I'd love to hear from you guys if you have listings coming on, and if you're starting to see any pickup on, listing appointments, as well as, listings that are going to be coming on in the next few weeks or months, so that we can kind of get a pulse here. That would be great as well. So that's kind of what I told them, that I'm hoping as the weather improves, and we get more into having, more availability for the vaccine, that we're going to see some more homes come on the market. So CoreLogic, our home prices, obviously, we're still seeing them go up. They're 10% year over year from last year in January. Keep in mind, January and February of last year were the slowest months we had all of last year. And they were extremely low, compared to even January's and February's in the past. So, comparing them sometimes can be a little skewed, because, those were pretty slow months last year. And then obviously COVID hit, and then the market took off. The one thing I have noticed, and I'd love to hear from you guys as well, if you've seen the same thing, is the condo market supply has been growing. And what I was, in my research, but also from what I've seen from clients, is that market seems to be a little bit more balanced between buyer and seller, where you're not seeing as crazy escalations and things like that. I had several contracts last week, and almost all of them that won were condos, because it's really tough right now in that single family townhome market, to win an offer. So the offers that I have been seeing winning have been condos. So would be interested to see. So Robin just said she's seeing the same thing. So yeah, so keep that in mind, and there's a little concern for me in that regard. And it says that if condos are, not selling as fast as single family and townhomes, is it as good of a long-term investment? So I'd love to hear feedback that you guys might have on that as well. But it is an opportunity for clients to be able to own a home. There's also a lot of condos in our area that are 2-level, that look like townhomes, so there's different types of condos now that are available. And I have a client in particular that's looking at one, and they're very beautiful. So again, it's that condo fee that, can be a dagger, but something to keep in mind. But if you're, if you have clients kind of in that pricing range, that condos may be something to look for. This was just an interesting, and it's something like, I think there's a lot of professions and businesses during COVID that have really done well. And then there's others, obviously, that have been extremely affected. And one of the ones that, I'm sure we've thought about, but I hadn't thought about in too much degree, was the metro. Obviously they're having a big budget deficit, because their ridership on the metro is down 90%. And then buses, I think, were down 60%. So it's kind of amazing that how much, different organizations are impacted by this, and we may not be thinking about that. So just thought of as a interesting piece of information. And then I already mentioned this, but like I said, there's talk that the Federal Reserve may tweak their policy to address, some of the turmoil in the bond market, to try and help things not be so as volatile as we've been seeing. So I'll keep you tuned to that. So anyone have any comments? So I'd love to hear in the chat, or mute yourself. Are you seeing any increase in listings appointments that you see coming up for the near future? And then Robin said, more homes than usual coming back in the market, contracts falling through. Yeah, and I'll get to some of that. One of the reasons why. Well, when it says, what reasons are you seeing? I think one of them might be, Robin's asking, is it buyer's remorse? I don't know if I've seen that as much. What I do think some of it might happen is appraisals, which I'll get into in a little bit. It could be, the remorse as well. I think, financing, if they're waiving contingencies and then the financing doesn't, come through, that can also always be a reason why. And then I think, unfortunately, some of these, people are not able to do home inspections for the most part. I think also if they, get into the home again, Yeah, that's Melanie just said it. See, Melanie, we're thinking on the same terms. She said home inspections, doing them for info only and then voiding on other terms. So, so I definitely think that those are still having impacts as well. So thank you for that. Anybody else about listings? I want to hear from you guys because so if as we'll move on, but I'd love to hear what you're seeing in your business. So it kind of gives me a pulse of what's happening too. All right, so something else that
I actually have a quick question. Just you kind of touched on it. So I do have a possible seller in Falls Church, and they're looking to sell their house. They have a kid, so they are thinking about getting a condo. You know, since the inventory is pretty good for those right now, living in it for a couple of years. And you touched on like the investment part of it. Is that, and you know, and then renting it after the couple of years and buying a bigger home. So I don't know, what are your thoughts on that?
I mean, I think a lot of people do that. Whereas I think if you're keeping it long term, and it's in an area that, you know, the rental market is strong, that can definitely be, I think, a different type of investment rather than my investment was, you know, appreciation, that you may not see as much of appreciation on a condo as you would on a single family or townhome. But for condos, I think they can be great investment properties because if you're planning to keep them, if they're in good, you know, like I said, areas that the rental market is strong, then that would help, you know, cover the monthly payment. And then you can build equity just by over time by paying the loan down.
Awesome. Help? Thank you. Yep.
All right, good. Okay, so Ashok said, how does the high condo fee affect regarding qualifying for first-time home buyer mortgages and their pre-approval letters? Well, obviously, when we're looking at purchasing a home, you know, whether it's a condo fee or a homeowners association fee, we have to include that in the debt to income ratio. So it's something that we definitely have to be aware of and know what those fees are. And that's why it can be challenging on the lending perspective to say exactly what sales price range the borrower can be looking at to achieve a monthly goal of that payment, because those condo fees can vary so much. You know, like I have a client looking right now, and she looked at one that was $476 and another one that was $250. You know, that's a pretty big swing on the monthly payment, you know, in a very similar price range. So that's why, you know, if they're looking at condos, we try to average what we think a condo fee might run. But I always have the conversation that we need to keep in mind that these condo fees can change, so that when you're looking at that home, you know, look at that compared to what I've estimated, so you can get an idea of how that might impact the monthly payment. So it does impact the debt to income ratios. Also, if you're looking at doing like a VA or FHA loan, condos do have to be approved by those organizations. So there's online systems that you can look up the condos to find out if it's a VA or FHA approved, so that we know if we can do those types of loans in the community as well. And then for a new loan application was implemented yesterday. So it's been a little of an adjustment for my team and I. So our system is all different. I think the application went from 5 pages to 10, I believe. So it's just a lot more words and a lot more spread out. When you start to go to closings, probably you'll see it in April, I would say. You'll probably start to hear that application is now doubled in size. So it's just more information that we're gathering, but in different ways, I guess. All right, so Maddie said, do you have any advice on how to prepare a homeowner who is in forbearance? Should they sell or prepare themselves for a higher mortgage payment? So when a client is in forbearance, basically like the client I was talking to earlier today, they have, you know, who's been in for a year and they're coming out of the forbearance, and then they're going to add that balance to the mortgage amount. So basically that means that just has to be paid when the loan is paid off. So if they were to refinance or to sell their home, that balance is going to be due at that time. But what the mortgage industry is also requiring, if you don't satisfy that balance and you're going to tack it on to the mortgage amount, then you have to have 3 months that you've made payments to that loan outside of forbearance before we can do a new loan. So they want to keep that in mind. So they don't want to assume that when they go to sell that home and they've been in forbearance and they've never made a payment outside of forbearance again, they may have a waiting period of up to 3 months before they will be able to get a new mortgage. So I had a situation actually last month that we were able to do one. They were in forbearance and they sold their home. They paid the balance due when they sold. They didn't make any payments, they never came out of forbearance when it went to closing. But because the property was an investment property for them and not their primary home, we explained how COVID impacted the renters, and that's why they were struggling to make the payment. But their own housing, they made the payments on time, and we verified that they had been making that rent payment on time. We were able to do the loan right away and not have a waiting period. We actually had to wait a couple weeks because it was an FHA loan. But that's something you definitely want to have the conversation with your homeowners and have them talk to a lender to figure out, is there going to be a waiting period? Because I'll tell you, in that situation, I talked to my head underwriter. They actually called HUD, asked them the question, can we do this? Here's the scenario. HUD said yes, but you're going to have to wait because they were selling, the home they were selling also had an FHA loan. We had to wait for that loan to be paid off before we ordered a new case number. And so we had to wait about a 2-week period. And so then we were able to do it. Well, this borrower talked to another lender, and this lender said, you can't do an FHA loan. And I said, well, we talked to HUD, we got confirmation that we could, and we closed the loan last week. So you want to make sure you're talking to someone that's doing their due diligence to make sure they're giving you, the borrower, the best information they can to make sure, they are going to be able to move forward. And if so, when, is what I would say about if they're in forbearance. Okay, so then I mentioned this before, but again, I think some of the restrictions that we saw on, not non-residents, that aren't U.S. citizens or green cards, there is a little bit of opening up of some of that. So one of those was DACA, which I was so happy to see because I just felt like it was so unfair that they weren't able to get certain types of loans, are now able to get an FHA loan. They're able to get conventional through Freddie Mac. And then now they're also able to get FHA. The other thing to keep in mind, because I do see this many times, is that when people are looking at refinancing, refinance their current home and they plan to keep it as an investment property, and now they're going to turn around and go buy another home. Technically, when they refinanced that property, they signed, documents that said they plan to live in that home for 12 months. So it's going to have to be a very kind of extenuating or explanation of why they are now going to buy a new primary residence when they just refinance their current home. So keep that in mind too when you're talking to clients when they're looking at listing their property or going to buy a home and they currently have a home. It may take a little bit more discussion, on your end to talk about, have they gone into forbearance? Did they recently refinance? Ask those types of questions when you're talking to them if they have a current home and they're planning to keep it or even sell it. The other thing, good news is that products are opening up a little bit more to lower credit scores. So during COVID, credit scores, minimum credit scores really creeped up, and they've now started to come back down slowly. So we were at 620. Some of our FHA now can go down to 580 again. So those are conversations. Again, that's going to be the whole picture that we're going to have to look at. They're going to have strong debt to income ratios and things like that, maybe some reserves if they're looking at going to a lower credit score like that. But it's now the potential is there at least where it hasn't been for several months. The other thing that's opened up again is jumbo refinancing. And I'm just telling you guys this just so, again, I've had a lot of agents reach out to their past clients just to stay in touch and talk to them. And these are questions that might come up. But those products are also, the lower ones are for purchases also. But jumbo refinances went away for a while as well. And so those are now back. So if you have clients that have been wanting to do that, that's something that's more available as well. The other thing, I'm just sharing things for informational points. One of the things that in Virginia, if you have a second loan against your property, a second lien, and you're refinancing your first lien, we have to do something with the second to keep it in the second lien position. So there's a thing in Virginia that's called auto subordination. And I won't get into the details, but it means we don't have to go to their current lender to get, approval to be able to refinance the first. But if we do have to go to that second lien holder, just know that those are taking quite a while. We've submitted one and it's been 2 months. and been waiting with SunTrust on waiting for them to approve the subordination agreement. So if that's something that they're looking at doing, and that might be timing of when they're looking to close or things like that, just things, informational points for you to be aware of. Any questions on this screen, or any other thoughts or questions? Nobody has shared about their listings yet, so keep that in mind. Let me know. All right, so this is something that's come up frequently for me, and that's why I'm going to say it again this month, even though I said it last month. I'm seeing a lot of property listed on the contract that are not connected to the property. Like I'm trying to think of some examples, but we saw like a table in the foyer, pictures. Just all kinds of different things. And for some reason, I feel like we've kind of gotten more tough on this, and I don't know why, because I do think it's kind of silly. But if you put personal property listed on the contract that is not, connected to the property, meaning like attached, we are normally going to either have to have that removed from the contract through an addendum stating this, property is being removed, or two, we have to get an addendum that says there is no value associated with those items. So I had to do this last week, and the listing agent called me and said, this is crazy. And I said, I totally agree with you, but unfortunately it's something that we're required to do. So just as an FYI, if you can, put those things on an addendum to begin with, so that we don't have to, worry about any value that might be associated with those. Because that is going to be something that's going to be coming up. The other thing that's come up for us as well is just make sure that the contract, the name you put on the contract, matches their ID, because that's something else that we've run into several times. COVID, again, we just had a training on this ourselves on Friday. Our head underwriter was doing it because the self-employed borrowers due to COVID has just been really scrutinized. And it's one that I think is challenging for the underwriter and also challenging for us. So just keep in mind, if you have a borrower that's self-employed, we're going to be asking them for a lot of information. And it might feel intrusive, or it might feel really cumbersome. But unfortunately, it's something that we have to do based on Fannie and Freddie. We used to only need to do this when it was a jumbo loan. But now Fannie and Freddie have really cracked down on this, because their concern is this income has decreased due to COVID. So we have to get 3 months bank statements. But not only are they looking at the bank statements to see is the income consistent with what we're saying that they've been earning, but what does their expenses look like? So if your expenses are much higher than your income, that's a concern. Or if the income that we're saying you've made, we don't see that on an average being deposited over those 3 months bank statements, we may need more bank statements to show, that you've been averaging that over, the year, but we may not see it in these past 3 months. So just keep in mind, we're gonna have to get a profit and loss statement. We're gonna be looking at, more details for self-employed borrowers than we ever have. And unfortunately, that is something that, every lender is going to encounter, and things that we're going to have to do. So keep that in mind. If borrowers are complaining, just explain, that it's due to COVID, and we just got to get through it. And once we're through it, then hopefully, everyone will be happy. Appraisals. So have you guys on your ends with your buyers, or on your listings, been seeing appraisals coming in low? Would love to hear the feedback for you. I have had a few coming in low, to let you know. Most of them that have come in low have been anticipated. So the buyer knew and expected, based on their advice from their realtor of what they thought it might appraise for. So it wasn't totally unexpected. I will see one adjustment I've seen most recently on appraisals that I hadn't noticed before, and it might have been there and I just hadn't paid enough close attention, is I had one appraisal that got a $20,000 adjustment based on the view. One backed up to a park, is what they said, and then the other one backed up to like a retaining wall. And when they went and actually looked at the properties in person, the pictures were very deceiving, and that adjustment probably wasn't totally accurate. But I also then saw that one went against us. That was not in our favor, that $20,000 adjustment. But then I also saw one on another one that it did go in our favor. And it was another $20,000 adjustment due to the view. And you would think that would be like a water view or something like that, but we're seeing it. And that might be ways that appraisers are trying to help with value and things like that. But there's some, so just keep that in mind, because I did talk to appraiser, you know, they can look at that. They can look at condition of the home is another subjective area that they can try to give some adjustment for. They can try to give some adjustment for time. Like I had an appraisal that came in low and the comp they were using was back in September, which obviously was a different market than where we are now. The other thing I will tell you is if you know that there are homes that are getting ready to sell, like there's a settlement coming that you're wanting the value of that settlement, you know, that comp to be used in the appraisal, that the comp has to settle before the effective date of the appraisal, which means that if we order the appraisal on the 10th, that effective day is probably going to be the 10th or the 11th, which means that comp has to have settled prior to that date in order for them to use that comp. So if the effective date's the 10th and that comp settles on the 15th, we can't use that comp to justify value. So I know a lot of you reach out to listing agents and try to find out, you know, what's going on with a particular home in that same community and when is it closing. If you do that, communicate with the lender so that then you could potentially time that appraisal, you know, to make it work to where you could potentially use that comp. Most lenders, us, do have the ability to rush an appraisal, so we can pay an extra $150 and get an appraisal back within 3 to 5 days on conventional and FHA loans, so that we could then potentially try to, you know, work with when that comp might be closing and still meet, you know, the dates that we need for the transaction. So some things to keep in mind on that. The other thing I will share with you is I've said this and I've done videos on it and all this stuff, but VA, so I did have appraisal come in that came in pretty low and it was not anticipated. We tried to challenge it within a comp that the conventional appraiser would not use after, and it, you know, it was dated the effective date. So it closed on the date of the appraisal, but they didn't feel like it was comparable enough to be able to use it. So we ordered it, we had to switch it to a VA loan so that they didn't have to put 5% down. It was going to minimize their cash out of pocket to make up that short on the appraisal. But so we had to order a new appraisal. The VA appraiser used the comp we wanted the other one to use, and then it came in at sales price. So my point here is VA has always gotten a bad rap on the appraisals. And in this situation, VA came out ahead. And used the comp that we wanted, and were able to, you know, and it wasn't by us telling them that, they just naturally did it on their own by being able to find that comp and use it. So VA is definitely, you know, never going to always be the one that's going to come in low. So keep that in mind. We are on the listing side. The VA loans can be very strong products for borrowers. And, you know, I had a conversation with a client last night who's looking at doing a VA loan, and we talked about, you know, kind of the stigma against VA loans, and me trying to reach out to listing agents and trying to let them know that, you know, VA is a great loan product, and people use it because it's so good. So why, you know, punish them for using a product that, you know, is such a great situation for them as an individual. So keep that in mind on the listing side of things. So Robin said, okay, yes, low, but because ratified at 30K over asking, so expected. So that's like I was saying, heard that some appraisers are accepting a spreadsheet of offers and the escalation addendums as evidence of value. True. I have not found that to be the case, because we actually did use the spreadsheet like you're mentioning when we challenged the appraisal that came in low, and the appraiser did not use it because they hadn't settled. So we have to, so they only can really use what has actually gone to settlement. But again, you know, this can be varied, you know, based on the appraiser, because I think there is some subjectiveness there as well. Christine said, thoughts on higher sales price with appraisal concerns in this multiple offer market. I mean, that's the thing I think with appraisal concerns, is that the borrower has to go in feeling comfortable to make up that difference if they waive that appraisal, and have a conversation, you know, with their lender to make sure that they have those funds. What does those numbers look like? You know, are they comfortable with that? And my client was comfortable in that situation, but it was just a much bigger gap than we anticipated. And that's why we needed to switch to free up some of their cash. And then it ended up working out for them. But it's really about having that conversation to make sure, you know, and that might be where, you know, you say, you know, borrower might have been planning to put 10% down. Well, maybe now we put 5% down so that we can free up some cash to make up that appraisal difference if there is one. So it's just having those conversations of ways that we can structure the loan if we needed to, you know, after the appraisal comes back and if it doesn't go totally, you know, in their favor. Are we getting bracketed appraisals? Not sure what that means on that. So if you want to give me a little bit more insight on what you're meaning when you say bracketed appraisals, because I mean, any appraisal that that comes in is going to have the value determined when we receive it, and they're going to be using comps, you know, that are have settled, and you know that they're going to be adjustments made and basically say, here's the determined value. The other thing to know with Fannie and Freddie conventional loans, that when we get an appraisal back, we do have to submit it through their automated underwriting systems that then gives us a score on that. And we need to have a certain level of score. And if the score is too high, then it may prompt us to needing to do a desk review. So that's something else to keep in mind on appraisals as well. So Tanya just said she got one back that was 20K under contract, but also expected appraisal contingency waivered. Yeah, and the 20K variance has been something I've seen, like I've done 10 to 20 is a little bit more common of what I've seen, but the one, you know, that VA one was much larger, which we weren't anticipating. And then Marissa, mini waive appraisal contingency, but isn't it true that the buyer can still get out through financing contingency if property does not appraise? I mean, technically, if they don't have the financing, you know, we have to deny them because they now can't make up the difference, you know, and not have the funds needed for closing. It could come down to them not being able to get financing if the appraisal does come in too low. So Joyce is requiring a low and high comp from the appraiser. In some situations I've seen that, and some no. You know, some of them have been very level, where meaning like all the comps are pretty comparable and there's not a big price difference. Others, like the one that we just got back that did come in a much higher sales price, did have a pretty high comp and a little lower, and then there was one in the middle, but they actually still went with the value over the middle comp. So there's kind of variance all over the place with these appraisals, unfortunately. So it's kind of can be hard to determine. All right, so the other thing to keep in mind, I don't know why, but last month I think we had 3 clients that had power of attorneys. They're all purchase transactions. They're all out of the country, and we had to. What you have to do is, you know, we have to make sure we get the power of attorney approved. We have to make sure we have the ID for the person that's going to be signing, and have their name all, you know, correctly. We have to know what the relationship is between the power of attorney and the borrower. And then we have to have the borrower sign the power of attorney and have it notarized, and then send the original back to us, and all get that done within the time frame of closing the loan. So if you know of any borrowers that are going to be needing power of attorneys, it's definitely important to get that information to the lender and title company as fast as you can, because we need to make sure that we're coordinating all of that and getting it done and getting it back in time for closing. The other thing I wanted to just bring up is sometimes on Fannie Mae and Freddie Mac loans, we may be able to escrow for repairs, which in the past I was not able to do. So if there's situations, especially like if it's weather related where they can't do something right now because the weather's not allowing it, we may be able to escrow. The other thing is if there's invoices, you know, that the seller's paying, like if they've done work, as long as the work has been done and it doesn't exceed $6,000, that can also fall on the seller side, as well as, you know, for paying for things like that, repairs and things associated with any, you know, challenges to do with the house. Ashok says, for additions, upgrades, are the appraiser asking the documents before they submit the report? Really, I don't know the answer to that because I don't have direct conversations with the appraiser. But what I've seen for the most part is, most of the time, if the listing agent is, meeting with the appraiser or providing the comps, you guys want to definitely provide all that information that you can to them, to let them know what additions, upgrades, anything that has been done to the property, so that will help the appraiser when they're comparing that home to other homes that have settled. So you definitely want to try and have that information together for them when they come out to view the home. All right, any other questions or comments or anything like that? That's all I have for you guys today. I do appreciate all the questions and comments. That was really enjoyable. So here's all my contact information. So if you do have any other questions, always feel free to reach out. So we're always here to help. And let me know if there's anything else.
Well, thanks everybody. Boy, Jolene, I know you were eating that up. That's wonderful. Questions. Thanks everybody. And don't forget to sign up for Jolene's conversion class next week on the 10th at 1 o'clock. Go to cindybishopworldwide.com to upcoming events. It's super easy to do. And then just use the menu and just hit webinars and you'll find it right there. Okay.
All right. Thanks. Thanks, Maddie.
Thanks everybody. Have a good one.
All right. Bye.
Bye-bye.
Thank you all.